India is among the largest markets for two-wheelers globally. The two-wheeler companies in India sold close to 16.5 million vehicles in the financial year 2015-16 and exported nearly 2.5 million vehicles. The Indian two-wheeler market has been largely dominated by two companies, Bajaj Auto and Hero MotoCorp. Both these companies have consistently gained market share in the previous 2 decades and have cornered about 80 to 85% of the Indian two-wheeler market amongst them. However, the competitive landscape has been changing steadily over the last few years, with the Japanese major Honda Motorcycles and Scooters, or HMSI, breaking its ties with Hero and launching independent operations in India. Secondly, the southern two-wheeler major TVS Motor Company has also been gradually taking strides to capitalize on the changing consumer preference for scooters compared to motorcycles. Consequently, HMSI and TVS Motor have gradually gained huge market share in both scooters and motorcycle segments in the past 2 years at the expense of market leaders Bajaj Auto and Hero MotoCorp. In the case of TVS Motor, its market share in scooters has risen from 12.7% to 15.4% in the last 2 years. Similarly, even in the motorcycle segment, TVS Motor's market share has improved by 120 bps to 6.7% now. TVS Motor has also done better than its peers in exports, and consequently, it has outperformed the two-wheeler industry volume growth by a comfortable margin in the last 2 years. TVS Motor reported a volume growth of 20.7% and 6.4% in FY 2014-15 and FY 2015-16 respectively, as against the two-wheeler industry growth of 9.1% and 2.7% respectively in the same period. What's more, the company aims to report high double-digit growth in volumes over the next 2 years and intends to continue gaining market share in the highly competitive domestic two-wheeler market. TVS Motor aims to achieve the same by entering new sub-segments in the motorcycle segment through its tie-up with German auto giant BMW to fill the gap in premium and leisure bike segments. In scooters, the company would rely on the introduction of newer variants and leverage on the success of its popular scooter models Jupiter and Wego. The macroeconomic environment in India is also supportive for higher growth rates in the two-wheeler segment. Two-wheeler demand would be boosted by a good monsoon this year after 2 years of drought, salary hikes for the government employees, and lower interest rates on consumer and auto loans. We expect the company's capacity utilization to improve substantially and bring in margin benefits for the company amid strong volume growth over the next few years. With TVS Motor's margin among the lowest in the industry, we see scope for substantial improvement in margins, driven by operating leverage and better product mix in favor of relatively more profitable products. Consequently, we expect TVS Motor's profit after tax, or PAT, to grow at a healthy CAGR of 34% over the next 2 years. TVS Motor has been one of the top calls from our fundamental research team and has made handsome returns for investors in the past few years. We believe that the company continues to be on a high growth path, with all the levers in place to comfortably grow at higher than industry growth rate, which would result in further healthy gains for investors. Thus, we recommend a buy rating on TVS Motor with a price target of Rs 455.